Top three things this morning in my notebook: number one, Japan; number two, Russia; and then number three, the CRB index. And Japan's been one that's probably been in our top three things for about a month now, and I think that that's primarily because it's got so much correlation risk to the broader market. Now, there's a lot of reasons for that, notwithstanding that the Japanese have really engaged in a policy that Ben Bernanke taught them, which is, of course, burn your currency, your stock market's going to go up, and then you can hope and pray that everybody believes it's a sustainable answer to growth. Now, obviously, people are concerned about that. The Mothers Index, which is widely held from a brokerage perspective, is down 18% in 2 days. So if you want to try that at home, you might get a margin call. But the reality is that that's a huge disaster, in as much as the Nikkei being down another 4.2% last night, and moreover, it remains broken from a trend perspective. Now, that coincides not ironically with the yen breaking out here potentially from a trend perspective. That would be new, and no, nobody is positioned for it in terms of macro hedge fund consensus. So again, just watch that Japanese risk. I think it's very relevant to capital markets risk. Point number two would be Russia. So if you're long Russia ahead of the Olympics, that's a bad idea. Russia's down about 11% now for the year to date. It's also, the worst performing stock market in Europe this morning. Now, there's a lot of reasons for that, not the least of which is that it's still Russia. But the other big point is that oil continues to look very different than the commodity complex. So again, we're getting a lot of questions about our inflation call. Again, it's not just about commodities, but again, not all commodities are inflating. Oil looks bad, Russia looks bad, don't buy Russia. Third point would be commodities. So again, looky here. Yesterday, the market's in free fall, and stock market being, and again, if you're long Japan, it's in free fall. But the CRB index, which is a 19-component index, and yes, oil can look bad, and Cocoa Puffs can look bad or whatever, but the bottom line is that the CRB index was up on the day. Okay? It's up on the day. It was up last week. It's up on the year. So on that small part of inflation expectations, that is inflating. Okay? So that's going up, and we do think that that has a causal impact to consumer discretionary stocks being down almost 9% in the U.S. for the year to date.